All right, so in this video, I want to talk about the upcoming down payment assistance program from CalHFA. It's called the Dream for All program. And I can't tell you how excited we are about this. They had a program that was really popular last year, but it ran out of funding very, very quickly. For one, it had a limited amount of funding to begin with. I think it was like around $85 million budget. But the program, it didn't replenish itself, okay? And so the way that it was designed was basically once the money was done, it was done. And so that was the Equity Builder Home Loan, where you got a 10% forgivable grant if you lived in the property for 5 years. And that 10%, you could use that for your down payment, closing costs, buy down your interest rate, basically your standard things that you can pay for with a credit. Okay. Now, the bummer on that program, besides the fact that it ran out of money, was that it had some very difficult income restrictions. You were only able to make 80% of what they call you were only allowed to make 80% of what they call the area median income. And, by most people's standards, that amount was way too low. I mean, realistically, to be able to buy a house in California, you need to most likely make more than what that AMI is, or at least more than 80% of it. Okay. So that was the old program. The new program, which it's not even available yet. Lenders are basically learning how to underwrite the program, familiarizing themselves with the guidelines, the post-closing, all that stuff. And sometime, we believe in March or April, so just right around the corner, this program is going to become available, and we think that it's going to be very, very popular, just like the last program. Now, this time around, there's some really cool things, okay? First off, let's talk about the budget, because that was kind of one of the downsides of the last program, was that it ran out of funding too quick. Now, this program has already received $500 million in funding, so more than 6 times the amount of funding that the previous program had. This new program as well is supposed to replenish itself through share appreciation. And I'm going to get into that a little bit in this video, but basically there are some mechanisms within how this program works that will hopefully keep it alive for the long run, but we'll have to see how it works out. So our advice is get in while the getting's good, because you never know how long this is going to last. So let's talk about the actual program. Okay. Now, with the Dream for All program, buyers are going to get 20% in down payment assistance that they can use for their down payment, they can use for closing costs, they can use to buy down their interest rate if they choose to. So, I mean, this is going to be huge, because normally the down payment assistance programs, maybe you get 3%, 5%, 6%. We're talking 20% here. So this is a substantial chunk of change. And if you think about it from an affordability standpoint, the less you borrow, the cheaper the monthly payment. So getting like 20% versus 10 or 3 or 5 is going to increase affordability. But also, you might not know this, but when you put less than 20% down on a home, you're going to pay what's called private mortgage insurance. Well, if you are putting more money down, that means that your PMI is going to be less, which will further reduce your cost of ownership, which should make this program available to more and more people, because it's going to increase affordability. Now, although we still don't have the final guides on this, as of now, there are not going to be the same income restrictions as the previous program. So this means that pretty much everybody that's going to want to take advantage of this program's going to be able to qualify in terms of income. Now, what we have not seen yet is the interest rate. Now, on some of CalHFA's programs, they actually charge a higher interest rate than what you could get on the streets for whatever program you're getting. But that's part of how they pay for those programs. Now, what we saw with the last year's program, which was the Equity Builder Home Loan, it actually had an extremely competitive interest rate. And so far, with the presentations that we've seen from CalHFA, that appears to be the plan for this program too. So once that becomes available, we'll be posting more videos with loan scenarios and all that stuff, but we are anticipating the interest rate to be very competitive. Okay, so I've told you it's a 20% down payment assistance program. It's through CalHFA. So far, we haven't seen any income restrictions. Now, let's talk about the share appreciation, or equity share is, probably a more common term for it. So the way that it's going to work is, let's say that you're buying a house for $500,000. Okay, so your down payment assistance loan, if you were just using the whole thing for the down payment, you weren't paying for closing costs or rate buy down or anything else, then $100,000 would be coming from this down payment assistance program, which means that you'd be borrowing $400,000. You'd be putting 20% down. So in this scenario, you're not going to even have mortgage insurance, which further increases affordability, by the way. But let's say that down the road, you sell this property that you bought for $500,000, you sell for $640,000. Okay. Well, at the time of sale or refinance, when you basically, pay off that loan that you got, you are going to have to pay back the down payment assistance. Now, the cool thing is you didn't have to make any payments up to that point. Okay, so there's no monthly payments on the down payment assistance. And as far as the interest, there isn't an actual interest rate. What you're paying is equity share. So the equivalent of interest basically would be the amount of equity that you end up paying out in this equity share. So you borrowed $100,000 on that down payment assistance program, you're paying that back. So that means if you were selling for $640,000, okay, and you bought for $500,000, you had to pay back that $100,000 DPA, there's $140,000 in appreciation in equity that is built up. That's where that equity share comes from. And CalHFA, the state agency, they're going to keep 20% of that. So that's $28,000 in this scenario that I'm giving you. So that means, though, that you would get to keep $112,000 of the equity that was built. And again, you're getting into this with a cheaper financial monthly obligation because you have 20% to work with. I mean, this is a huge opportunity, and I'm really excited for homeowners to take advantage of this. Now, as this stuff becomes available, we're going to be posting more videos, but like we saw in the last program, it's imperative that you get involved quickly and take advantage of it before the funding runs out. Now, I know that the way they've got this thing set up is that it's not supposed to run out, but they've only allocated $500 million for the first year of this program. Who knows? Maybe there's so much demand that it runs out and you didn't get to take advantage because you waited too long. So if you're interested in this, click the link in this video. We just need a little bit of information from you. We don't need anything crazy like your social or date of birth, but basically just a little bit of information so that we can keep you up to date on the program and give you the applicable information so that you know how you can take advantage of it. Thanks for watching this video. Make sure to like it if you appreciated it. And if you want to see more content like this, make sure to subscribe. And if you want to see more content like this, make sure to subscribe, and we'll see you on the next one.